Buddy, it's Brian here. Today is Tuesday, the 21st, and we had a little bit of selling here today. A lot of red on this screen. I haven't seen that in a while, and in fact, we saw that the Russell 2000 is now down two-thirds of a percentage point year to date, joining the banks and the U.S. dollar and oil, which are all lower on the year. So things are different, changing here a little bit, and there was definitely some damage done. We broke that level of support that we've been watching, and from there, now it looks like we're likely headed for a test of that 50-day moving average, which is right now the value of it is 232.45, and we've got that year-to-date volume-weighted average price, that purple line right there as well. Below that, the next level of significance or importance would be the volume-weighted average price from the election, which in the Russell 2000, you can see we are now just below that level. So we are in the Russell 2000, definitely underperforming year to date. We've still got the potential for a little bit of support in this area, but obviously on a day like that, it just doesn't make sense to be a buyer in there. So let's go back to the S&P 500. We broke support, and after getting below yesterday's lows, that's when the floodgates really opened. As I said in the midday video, in this area here, when we did that video, that I thought it was likely to close near the lows for the day, that this is definitely something that's changed, and we were looking for maybe even some rally and then decline, but there was no opportunity for that rally. We broke below this next level of significance, and now we're going to see if this does in fact offer resistance up to about 2360 or so. Now we have this prior band of support offering the potential for resistance. And in the NASDAQ, we lost some important ground there as well. Yesterday, we were kind of dancing on this support that had been resistance. And today, after that gap higher, which failed quickly, from that failed move came a fast move lower. We broke this trend line as well, which has been the essence of trend for the last month and a half or so. And we're also below that 20-day moving average. And here, it's still looking like, we've got that 50-day moving average down just around 128, and that's certainly a possibility that we could be heading there even as soon as this week. So there's no hurry to get involved in a market that's selling off this quickly the way it is. And you have to look at while we're below a volume weighted average price for the session, that bounces should be looked at suspiciously, and if you're more aggressive, as an opportunity to get short in there. So the NASDAQ is we're at a level now that has the potential in here to become some support. I would rather see it drop through there. What I'd really like to see would be for it to pull back the next couple days, close below that 50-day moving average, shake people out, and then perhaps rally again. But that's getting a little bit too far ahead of ourselves. For now, we are below a declining 5-day moving average, and that means it's guilty till proven innocent. Back to this Russell 2000, we have the potential that maybe there's some support in here, and I think that the best scenario would be there's got to be a lot of stops underneath these lows in here. So it would be best to see that the market comes down through that level in a nice little flush, and then it could potentially be ready for a bounce trade for aggressive traders. But we are below a declining 5-day moving average. We're below the year-to-date volume-weighted average price, and we are also just on that volume-weighted average price since the election. There's a lot of damage done in individual names today, and it tells me that it's not likely to recover in a very quick period of time. Amazon broke out to a new all-time high and was rejected there, and sold off from that high of 862. Dropped 20 points from there. So Amazon, the messages in these big caps, Facebook, which has been in this just steady Eddie uptrend here, big reversal outside day here, and I don't think it's the death of these stocks, but certainly indicates that some further profit taking is likely. Google, same story. Shares of Netflix, same story. So they're all kind of having trouble up in this area right now, and that tells us just to be cautious. Semiconductors finally had a pretty strong down day. Now, again, it doesn't, one day makes not a top. We've seen that this market has experienced other big down days during this gigantic rally it has. So it's still in a longer term uptrend. We're seeing some aggressive profit taking right now, and for the intermediate term, It's going to have to be back above 79 in the next day or two for us to trust this market once again. But for now, I'd say, it's in profit taking mode. We have the potential that maybe there's support down here at 77.50. So that, know the key levels. Look for your intraday charts to see where stocks may be finding some support. And if they get back above a flat to rising volume weighted average price, there might be good bounce opportunities in some of these. Biotechs, I mean, this is why we have stops. This is, it looked like this thing was going. I said even for longer term investors that a stop should go just under this 294 level. And you know what? It sucks taking a loss. Nobody likes to do that, but it's better to take that loss at 294 and be out of it than looking at it today and seeing it down 8 points from that level, or 3.5% or whatever the percentage point is. But the biotechs now look like they're definitely they've got to be headed for this 50-day moving average. It's only a little bit below us, and the year-to-date volume-weighted average price you can see right there, and the volume-weighted average price from the election. So it seems as though this ought to be a band of potential support for these biotechs, but to buy blindly into a strong sell-off like this makes zero sense at all. Shares of Apple, same story as these other big stocks. They've been in these great uptrends, and now it's likely that this commences a period where they either correct through time with a shallow price pullback, or we're going to see a deeper pullback in some of these individual names. My suspicion is we see a little bit deeper pullback in some of these names as profit taking just kind of begets profit taking here.